Yeah, guys. It's your boy JJ Money. So today's video is going to be awesome. It's going to be the best alternative to Martingale or the best risk management of Martingale. So, and I call this risk management the rollover risk management. The rollover risk management has a low risk and high reward. Okay, while the Martingale has a high risk and let's say a low reward. Okay, so I've been using the Martingale. It has been good also. Okay, that doesn't mean it's not working. It's good. Like today we had 100% win rate on our signal group. You can join. This is it, 1st of April 2024. We have four sessions. We trade 9 a.m., 12 noon, 3 p.m. and 6 p.m. All of these are GMT plus one. So we had five. We target 5 wins each. So you can see we had 20 wins in today. So last week we had 60% return on investment, or let me say 78 wins and 3 losses. So it has been a great it's a good strategy that we use. So I'm going to quickly share the strategy with you. But before I share the strategy with you, I want to explain to some of you that don't understand what Martingale is, so that you understand when I mean Martingale. So we have a spreadsheet where I'm going to explain to you. So this is a Martingale spreadsheet. So don't forget about this number 5 and 6. Just focus on T1 to T4, which is trade number 1, 2, 3, 4. So what it means is that when you take a trade, you need to have, for you to take 4 trades with Martingale to recover all your money, you need $16 or $16.9. So what it means is that your first entry is going to be $1. Your payout is 90%. So what it means is that once you make $1, once you win this $1, you make 90 cents. All right. So if you lose the $1 on this first entry, you increase your capital, or you increase your stake to about $2.1. So when you win this, you recover this $1 that was lost plus a profit of 90 cents. So that's what Martingale is. Same thing goes to the third trade. Once you lose the second trade, you increase your capital to 4.4. So this spreadsheet helps you if you don't know how to increase it, but it's just simple 1, 2, 4, 9. So the 4.4 means that once you win, you recover the trade number 1 and 2 plus 90 cents as your profits. If you lose trade number 3, you're going to increase it to 9.3. So once you win the trade number 4, you recover trade number 3, trade number 2, trade number 1, and it still gives you the profit of 90 cents. All right. So what this means is that you're risking $16.9. So if you had sometimes you if you like those times we lost last week, which was about 3 times, you've lost 16.9 dollars 3 times. But whenever for you to win $16.9 with this particular setup, you need to win 18 times. All right, you need to win 18 times. You need to win 18 times. Let me just move that from here. You need to win 18 times, 18 wins for you to make the $16 profit. All right, so that's what it makes. So now we had close to 80 wins last year, so we were in profits. Okay, so that's about that. But because of this, sometimes some people have low capital and they don't have enough. Maybe per venture, the first trade or the first 2 trades might be a loss. You know what happened? That means you lose your capital. So that's why I brought up this plan called the rollover risk management. We're going to be using the same rules of 4 martingale or 4 entries, not martingale. Let me not use the word for martingale. We're going to use the same rules of 4 entry criteria, but it's going to be a different way from using the martingale increase, which is high risk. Okay, so I'm going to like I've created this document. I just put it as tier one, trade number 2, trade number 3, and trade number 4. So on each setup, we have four lifelines to win it. All right, so that's what it means. So I'm going to explain how we use trade number 1, how we use trade number 2, trade number 3, and trade number 4. So sorry if this video is going to be a bit long, so just 4 minutes into the video. So I will just go to the charts now and explain how we use our strategy. so that you can understand. All right, so let's use this particular side. So I have these vertical lines. So with our strategy, so you can check our YouTube channel. There's before I move further, please make sure you subscribe and like this video on our YouTube, and you can turn on the bell. Join the community where we post free signals. Everything is free. We're not requesting any money. No, we have some forex strategy which is working. You can make 100x. You can make 200 pips per week with our strategy. It's on the YouTube, so make sure you join and subscribe. All right, so I'm going to explain this strategy to you. You don't need any indicator. Just make sure your chart is set up like this. We're using the 1 minute time frame. You select any of this, the candlestick 1 minute, blah blah blah, and 1 minute expiring. You can use any time of expiring. So let me just explain the strategy. You need to color candles. Okay, just a recap. You can check the videos. I made a live session with the community. You need to color candles, minimum of two. If you see three, fine. So I think there's three here. All right. So let's say you saw this now, one, two. You start looking for entry. You need two color candles, either green or red. So for this, we saw a red, two red color candles. I call it sell signal. So once you see two red candles, before I show, okay, before I let me show you there's an image I created and I posted on this community. A moment, guys, a moment. Just there's an image I posted regarding the, okay, this is low risk. Posted a lot of stuff, so sorry. Just a moment. I'm gonna get there now. I should have arranged this image before continue this. Just bear with me. I just wanted to show you this image so that you can understand the strategy very properly. So this is it. So let me just zoom in the image. So waiting for my PC's lagging. All right, let me just so now what it means is that you need to color candles minimum. This is the sell setup. So once you see it's called medium risk and it's called uniform strategy medium risk, two red candles once you see an opposite color candle, it can be more than two color candles. It can be 3, 4, 5, 6, 7, 8, 9. It can be, as long as you see minimum of two color candles together. You're waiting for, what you're now waiting for is the signal candle, which is green. Once you see a green color candles, you wait for, once you see, immediately this green candle closes, you start taking your entry. So I label it as for Martingale entry method. So you start with down, down. You start with down, down, up, up. So if you lost trade number one, you take trade number two, trade number three, trade number four until you win. If you lose the whole four, fine, that is a losing trade. But if you win either trade number two or three, that is a winning setup for that particular trade. Same for the buy setup. For the buy setup, you need minimum of two green color candles. It can be 20 color candles of green. It can be 10. It can be two. It can be four. So minimum of two. And you're waiting for, what are you waiting for now? You're waiting for the signal candle, which will be an opposite color of the continuation color. So once you see the an opposite color, you start looking for your entry. Once this closes, you start with up, up, down, down, meaning you take higher. If the price closes higher, you take higher also, and if you fail second, third, and fourth. So that's what it means. So green, green, up, up. All right. So sorry if the image is not um within. This place was supposed to start. This candle was supposed to start somewhere around there. Sorry about the image, but you get the explanation. So I'll just leave here and go to this page. So that's what it means. So from here, this would be a buy setup. This would be a sell setup. Just for entry number one, a win. So you don't need to do more martingale. You start looking for new setup. So that's just how the strategy is. So um, I'm going to fill up like 30 trades, let us say 30 trades, and show you how we're going to be using this strategy. So what it means is that let's just go back. Let's say, let me just use about 1 hour. So let's just start from here. I just want to start from somewhere around there. So please, I don't want you to go. So if you don't want this to auto scroll, so you would disable it. Auto scroll is disabled, so why is it going back? All right, so let's start from here. So we saw first trade. So let me, or before I do that, let me explain how this works. First trade, I just want to do this like together so that you understand when you're trading live how you're going to be calculating this. So you're not going to use Martingale. First entry is this. You've seen two color candles, so 3, 4, 5. Fine. You're waiting for an opposite candle. So what happened? You first you take a sell here. It's lost. The first entry was a loss. Another sell, it was a loss. Then the third entry would be a buy. So remember, for a sell setter, it's gonna be buy, sell. So the third buy was a sell, was a winner. Instead of Martingale 3, it's going to be I'm just gonna put it as star. Let me just use the um let me use star button. All right, or X button. All right, so what this means is that with this, instead of you using 16, you can use $6. $6 can be your maximum so you would start trading this with, let's say you have only $6 on your capital. What you do is you trade $1, $1, then here you're going to add 1, 2, 3. If you lose trade number one, you lose trade number two, you lose trade number three, and you so on trade number four, you're going to add all of these three amounts that you use. You just put that amount here, which will be $3. So on each trade, we are trading the same amount. So we're trading $1, $1, $1, but here is not going to be $1. Here is going to be $3. Okay. So let him just write capital. Capital is we have about $6 as our capital. Okay, so um, we have $6 our capital. So let me just expand this so that you would see this. $6 our capital. So you write $1 lose here, $1 loss here, but you won $1 here. So you'll be left with how much? How much will be left here? So you'll be left with about so I'm going to be opening a calculator because I need you to understand. It's going to be like a bit long video. So let me just open my calculator so that you understand how will we get, how we're going to increase our capital life. Okay. So what's going to happen is this. You, sorry, let me just reduce this size to big. I don't know why it's just too big. I don't need it to be too big like this. So yeah, so it's okay like this. So we had $6. Trade number one here, we traded with $1 was a loss. Trade number two, $1 was a loss. Then trade number three, $1. Trade number three, $1. So we made 92 cents. So plus, so I'm gonna add plus 92 cents. Remember, our profit is just the 92 cents. So our capital will go back to $5. So I'm just going to put here now. So let me just put capital here and just put it here. Capital here is $6. So here is going to, so I'm just going to start putting the amount we see here, 5.9. All right, so I just want you to take notes. It's going to be a long video, but just bear with me. All right. So the next thing we're going to do now is the next trade. We are going to roll over this win to the next trade. If we had the next trade and we lost here again, we lost here, we're not going to use $1. We're going to roll over the whole amount we made on trade number four. I'm gonna trade number three. I'm gonna explain that. But on trade number four, we don't roll over, or we just only calculate all the amounts we lost, and we use we use that amount to trade number four. So what it means is that we're just gonna recover some part of the money. Yeah, we're going to still be in small drawdown, but it's better than losing all. So what it means is that if I win trade number one, I'm going to roll over trade number one here. I won it. The next trade, I'm going to roll over all the amount I made in trade number one on trade number one only, not on trade number two or martingale number two. All right. So if I win this 2, I will start over again. That's how it's going to be. So we're going to do this together. So the next setup is here. So we look for 2 color candles, green, green, and we had a what do we have here? We had a signal candle here. So let me just zoom in. We had a signal candle here which is red, and our first entry is going to be buy buy sell sell. So imagine if you take this on rollover buy buy sell sell, it will be a good win, 4 wins, but we're not doing that for now. First entry was a winner, so what we're going to do now is going to be first entry a winner. So it is I'm going to just add X here. So what this means is that you have made I'm going to plus 1.9 because we're using 1.9 $1 and plus the money. So our money is now 7.8. But remember, sorry, so this calculation is wrong. It's not supposed to be 7.8, 1.2. So I'm just going to add only the profits. Okay, I'm going to add only the profits, which will be 0.92. Because if I say I'm adding 1 point, because I'm removing $1 here to make 92 cents. I'm not going to add the $1 I used to make 92 cents. So I'm just going to add here. So we have 6.4 dollars. So what we're going to do here now is going to be $6.4 would be this. At this point our capital has gone back to 6.4. We've now made 84 cents. No issues. So now what will happen now is we're going to roll over the whole amount we made on this trade to trade number 4 on only on entry number 1. Not We're not going to roll over to on it on entry number 2 or entry number 3. Do you get it? So I'm not going to take it's because the video is going to be too long if I do all of this. So I'm just going to stop around maybe few more trade, maybe 2 or 3. So you understand what I'm saying? So let's just see what happened. So we won here. We start again with a setup. You can see this strategy is so powerful. So 2 color candles green. So we're going to look for we've seen our signal candle. So we're going to start with down. Okay, sorry, up. That's green, green, down. So we won the third entry. So the third entry, what is going to happen is this. We are going to say, we're going to say -1. So remember, with this third entry, we are going to now. What will happen is we are going to roll over 1.92 here, but we lost it. We're not going to roll over on this second trade. We're going to start again with $1. But on this part, because we had a win here and we've not done the rollover on trade number 3, we're going to roll over trade number 3 here, which will give us some profit. So for here we will lose $1 here. We'll lose another $1 here, but we would now make. So how much do you make on so let me just get this amount, 4.7. So let me just write that somewhere on my phone, 4.84. So let me explain something. If you had $1, you trade, and your profit is you're going to make. Your first amount you're going to make will be 1.2, and you use the whole amount to roll over. Your profit you're going to make, the total amount you're going to make is $3.6. But because $3.6 minus the capital you use, which will be $1, is going to be your profit is going to be 2.6. So the amount we make here is going to be 2.6. All right, so 2.6 plus 4.8, 4.84. Boom, you see our money is already increasing. All right, yeah, of course, if you're using the martingale, your capital would have increased faster. But what if you now lose the whole 4 trade? You need $16. So that's just it. This within few trades, you will double the $6 to about $12 within, let's say, in the next few trades. So we won here, so I'm going to add it here. So let's see if we would lose any trades. And so we start counting here again. Trade number one, we start see a signal here. First entry was a win, so we'll go here. So I'm just gonna be fast now. First entry was a win. So how much was that? So we're going to add the profit, just the profit, 0.92. So remember, we're going to we're going to roll over if we win the next trade. So let's just calculate how much is this. All right, so I hope you're understanding how this risk rollover risk management is. You only roll over the particular pot you won. Okay, you don't roll over all of it on different pots. So you check. You have to have a spreadsheet, or you can use it. I don't think anyway. Can have a spreadsheet to know whenever you win. Just place the trade on trade number one. You won trade number one and the rest. So on this, we look for the next trade. So next trade was here, and so we saw two color candles. We're waiting for a green candle. Yeah, we saw a green candle, and boom, we won first entry. First entry was a win. So we roll over this particular profit, the amount we made there. So the amount we made there, if you we've already added 92. So remember it's 2.8 for a rollover money you made with $1. So just minus 92. So I'm just gonna add 0.19. So we made plus 0.19. Already we have already doubled the amount. So already this is just how it works. So you can see within few trades, you already doubling your account. Okay. So let's say you have $100. Let's say you have $100. You can decide to say, okay, I'm going to divide my capital into four, okay, or three. So let's just say you divide your capital into four. So your total amount you're going to use here is going to be $25 on the whole four trades. So how it means is that you're going to risk with this you can make 20. So imagine you started with $25 already. Here you've within 1, 2, 3, 4, 5 trades you made $25. So with that you are very certain you don't lose your capital faster. You don't lose your capital. So with this now, with $25, how would you start? You will start with let's divide $25 into three. Let's say 5 plus 5 is equals to 15. 15 plus 15 is equals to 30. So you will have to do the math that will give you $25. So remember, so it might be maybe 4.5. You start with 4.5 plus 4.5 plus 4.5. Remember, three trades will be the same amount for the rollover. Then the fourth trade, if you lose trade number three, on the fourth entry, you're going to plus all the amount you used on trade number one and just take the whole amount there, which would be 13.13. So you just use 13. So 13 would be plus 13, 13.5, which would be, yeah, 27. So around that place. So maybe $4 would be the amount you start with, $25. But if you're using $5 for Martingale, see the amount you will need. You see, you just need $25 for this to make your 20. But if you're using $5 with Martingale, four Martingales, or just four Martingales. So let's see what the calculator will give us. You can see you're going to need 80. What's this? You're going to need $84. That's crazy, man. That's like you that have $100. But you see how I divided this $100. You already have $25. So with this, within 10 trades, you've made your capital. So I will stop here so that the video doesn't get too long and boring. I'd like you to ask questions. The strategy is working. The system I just gave you is mind blowing. Please, these things I just share with you, they are what's good. Don't take them lightly because they are free. Please make sure you take advantage of them. Join the community and ask your questions. So this is the best risk management apart from Martingale. So thank you so much and have a glorious day. So ask your questions on the comment section and the rest. Make sure you join the community. Sign up on Pocket Option on my link, and you get 50% bonus, which will be added to you. With this $16, I'm going to make a video next how I'm going to trade this live, or I'm going to record my screen while trading this and fast forward it so you can see, so you don't get boring. Thank you so much, and have a glorious week.